Hi, welcome to my channel. If you find this tutorial helpful, please don't forget to subscribe, like and leave a comment. It makes me create more content like this and you will not have to miss out from any useful tips whenever I upload new videos. Have you ever baked a cake, sold it and later realized that you made no profits? Or maybe you are just starting your own baking business, but then you do not know how to charge your product well. Don't worry, you're not alone. In this video, I will break it down in the simplest way so that by the end, you will know how to price your baked products and ensure that you're making profits. Let's go. It is important that you know the reasons why you need to cost your products before selling to potential customers. Here are two basic importance of costing. Number one, costing helps you avoid underpricing or overpricing. Underpricing means setting your prices too low, which can harm your business in several ways. For instance, if you don't charge enough to cover your cost and make a reasonable profit, your business won't be sustainable. Customers may assume your products are of lower quality compared to competitors. In fact, you might struggle to restock ingredients, maintain equipment, or even pay yourself. Overpricing, on the other hand, means setting prices too high, which can also be risky, and it can be risky in several ways. For instance, if your prices are much higher than competitors without added value, customers may buy elsewhere. Higher prices may even mean fewer people can afford your products because it would lead to slow business growth. Number two importance of costing is it ensures you cover all costs and make a profit. You see, costing helps you calculate the real cost of making each product, ensuring that all expenses are covered. Expenses such as ingredients, labor, rent, packaging, utilities, and several others. You can even add a reasonable profit margin to grow your business. In fact, you can reinvest in better ingredients, equipment, and marketing. You might be wondering, I don't really understand what underpricing and overpricing means. So here are two perfect examples to explain what underpricing and overpricing means. If a cake should cost 5,000 naira based on expenses, but you sell it for 3,500 naira, you might attract customers, but definitely you will run at loss. Why? Because all the things and all the materials needed to make that cake is 5,000 naira. And at the end, you are selling it for 3,500 naira. You will definitely be at loss because that money is not even up to the 5,000 naira you used to purchase those items. So that particular scenario is what we call underpricing. Now let's look at what overpricing means. Take for instance, if you price it at 10,000 naira, that is, if you price a cake at 10,000 naira without a strong reason, for instance, premium branding, some people want to brand their products very well. Customers may actually have to start looking for cheaper alternative. For example, now, let's say they go to the market and then they discover that this same product is being charged for 5,000 naira elsewhere. People are selling 5,000 naira, whereas your one is 10,000 naira. Now, it might be discouraging for them because they can actually get it elsewhere at the rate of 5,000 naira, but you're selling your own 10,000 naira. But one thing that can actually make them stay to want to patronize you is probably they have seen something that is distant, something that differs you from them. And that was why I used an instance of premium branding. That is, you are branding your products very well, which is different from others. But in the case where you set it so high, and then customers come, they still don't have a reasons why they still don't have any reason why they need to patronize you. Then they will say that your prices is high. And that is what we call overpricing. Let us look at an example of the second importance of costing I gave to you in the first slide. Suppose Suppose your total cost to make a cake, ingredients, packaging, rent allocation, and other expenses is 4,000 naira. If you sell it for 4,000 naira, you are only breaking even. That is, you are making no profit. Now, the aim of every business owner, or the reason why people venture into businesses, is to make profit, right? Because what is the essence of venturing into a business when you are not making a profit? Now, from this example, everything that you need to make a particular cake is 4,000 naira. If you sell it for 4,000 naira, it means you are not making any profit. You are just making and selling the same rate at which you bought it. How then can you grow? What is now the essence of having a business? So by having a 30% profit margin, which is 1,200 naira, don't worry. In this video, I'm going to teach you how to add a profit margin. Just stay with me. And what I did here is just a simple mathematics. 30 over 100, right, times 4,000 naira. You have 1,200 naira. Then you are adding it to your costs. Then you have 5,200 naira. You will discover that if you sell at 5,200 naira, there is hope for you because you are making a profit. Because you made your products at the rate of 4,000 naira. So 1,200 naira, which remains from 5,200 naira, which you sold to your customer, will become your profit. So you are making money with your business. And that is what costing does. Costing ensures that you cover all costs and make a profit. I hope you're following me. 3 main cost components. It is very important that during your costing or at any point of your costing, you involve or you include these 3 main components. Number 1, direct cost, which is also known as variable costs. Number 2, indirect costs, which is also known as overhead costs. And number 3, profit margin. Direct costs. Direct costs are expenses directly tied to producing your baked goods. In other words, they are expenses that are directly involved in producing your baked goods. Now, these costs change based on the number of items you make, actually. Examples for a baker. That is, examples of direct cost for a baker. You know, I said direct cost is what? All the things, all the expenses that are involved directly in the production of a particular product. Ingredients is an example for a baker. So all the ingredients that were used in producing a particular baked product, for example, flour, sugar, eggs, is an example of direct cost. Packaging, your cake boxes, your wraps, your labels, toppers, several others. And direct labor, which means wages for workers who help in baking. In fact, it should also include yourself. What do I mean? You actually need to pay yourself. So all these things should be looked at while you're costing your products. And this falls into the direct costing aspect of costing. Now let's look at this example calculation for a direct cost. If you bake 10 cakes and use 10,000 naira worth of ingredients, then it means that what? Your direct cost per cake is 10,000 naira. You know what I'm saying? It means you bake 10 cakes and then the amount of money that I used in making that cake is 10,000 naira. Everything, the ingredients, maybe the labor, the expenses when it comes to your your labor, your ingredients, your packaging, everything is worth 10,000 naira. Definitely your direct cost per cake is 10,000 naira. I hope you understand. Labor costs. Pay yourself. It is very, very important. You must pay yourself at every work you do. Now, let's leave ourselves as bakers. Even other people that does, I mean, that does manual work. Take for example, carpenters and all. If you call them, they will charge you for workmanship. And then even if they are charging for workmanship, they will also have to add their profits to their workmanship. They use the word workmanship. The workmanship is what? Their labor costs. And as a baker, you need to also pay yourself for your workmanship. Now let's look at the formula. Labor cost equals to amount charged per hour times time taken. Take for example, let's use this as an example. If you will be spending 2 hours to prepare a vanilla cake and you are charging 1,000 naira for an hour, labor cost for that cake will be labor cost equals to 1,000 naira times 2 hours equals to 2,000 naira. It's just simple mathematics. That is, you are paying according to the amount of time spent in making a particular product. For some people, they would want to use 500 naira for an hour. So if they are going for 2 hours, it means 500 naira times 2 hours is 1,000 naira. So depend on how much you want to be paying yourself in an hour. Let's look at indirect costs. Indirect costs are expenses necessary for running the business, but not directly linked to a single product. That is, it is not directly involved in producing a particular product. These costs are usually fixed and do not change with production quantity. Please take note. I'll give you this as an example, rent. Now, the fact that you do not bake cake today does not mean that your rent will change. I hope you get that. So, what I'm just trying to say is that the costs are fixed, irrespective of the changes in your production quantity. So, example of indirect cost is your rent, your shop space, or home bakery allocation. Utilities. When I say utilities, your electricity, your gas, your water, generators, and several others. Now, it is important that you also need to make payments for, your equipment, that is equipment maintenance, ovens, mixers, your marketing, the examples of indirect costs. That is, are you running ads on Facebook? Are you running ads on Instagram? Social media promotion and several others. So all these things need to be factored in your costing and they fall into the indirect costs. Let us look at this example calculation for indirect costs. If your monthly rent is 20,000 naira and you bake 100 cakes in a month, the rent per cake is what they are just trying to say. This is already indirect cost. Rent is an indirect cost. It is not solely involved in the production of your products, but it is fixed irrespective of the amount of product you make. It is still fixed. If you are renting a shop at the rate of 10,000 naira, you just have to make your payment. It's none of the business of the landlord whether you're making sales or not. You get what I'm saying? So to calculate the indirect cost per cake, you already know that your rent is 20,000 naira and you are baking 100 cakes in a month. Just divide your rent by 100 or by the amount of product you make in a month, and then you get your rent per cake. So for this, I got 200 per cake. 200 naira per cake. Profit margin. Remember I told you that I would be teaching you how to actually add your profits in your baking or in your costing. Profit margin is the extra amount added to your total cost to make a profit. It is usually expressed as a percentage of total cost, and there are several options. You have 30%, some people want to add 40%, some people want to add 50%. So whichever goes for you. So it is the extra amount, that is that amount you would keep for yourself. And so you want to use to buy clothes for yourself, you want to use to buy shoes for yourself. So that's the extra amount added to your total cost, that is the cost of products you used. to make a profit. That is profit margin, and I told you it is usually expressed in percentages. Now, if you are here and you're an upcoming baker, you're still coming up, it is advisable you make use of a 30% profit margin. So I'll be using a 30% profit in my calculation. Some people want to use 40%, some people want to use 50%, depending on the kind of your institution or organization or your bakery. Let me use that. So let's look at the formula. The formula here is profit margin amount equals to total cost times profit margin percent. So it means that if you are using a 30% profit margin, so you are multiplying 30% with your total cost. Basic costing formula. There are two formulas for costing. You can pick whichever that works for you. Selling price equals to total cost plus profit margin amount, or selling price equals to total cost times open bracket 1 plus profit margin percent close brackets, where total cost equals to direct cost plus indirect cost. But before we go ahead, let us know it is important you know how to calculate the cost per item, that is unit cost. And just from the word cost per item, it means total cost divided by number of items produced. Let's look at this example. You spent 10,000 naira to make 20 cupcakes, including ingredients. You know why I told you that if you look at the video, open bracket, including ingredients, comma, packaging and indirect cost, close bracket. So it means everything has been added and it gave us the sum total of 10,000 naira, which is your total cost. Then I ask you, you want to now calculate your cost per item. And remember, you are making 20 cupcakes. It simply means cost per cupcake equals to 10,000 naira divided by 20. And then you have 500 naira per cupcake. Now, let us now go to our proper example. How to add a profit margin. And I used a 30% markup for this calculation. If the cost per cupcake is 500 naira and you want to make a 30% profit, how do you do it? Remember that the formula for profit margin amount is what? Total cost multiplied by what? Your profit margin amount. Let's go back. That is it. Total cost times profit margin percentage. So let's go back to what we're talking about. So profit margin amount equals to what? Your total cost is 500 naira times 30% markup, which is your profit margin percent. So 500 times 30% gives you 150 naira. How did we come across it? 30%. That is 30 divided by 100 gives you 0.3. So 500 times 0.3 gives you 550 naira. Then the selling price now, since you've calculated your profit margin amount, let's go back to the formula for our selling price. See, selling price equals to total cost plus profit margin amount. We have calculated profit margin amount to be 150 naira. So what you just do is to add your total cost plus profit margin amount. This is it here. So 500 now, which is your total cost, plus 150 equals to 650 naira. That is the selling price per cupcake. Now I said, or you use the short formula. The selling price, that is selling price equals to total cost times open bracket 1 plus profit margin percentage close brackets. And how do you do it? 500 times 1. Sorry, this is 0.30 is what? Your 30%. That's 30 over 100. That's how you go to 0.30. So 500 times open bracket 1 plus 0.30 close bracket equals to 500 times 1.30 equals to 650 naira per cupcake. So it means that you see now, the cost per cupcake is 500 naira. You get? But because you need to make profit with it and you are adding a 30% profit markup, that is, if you want a 30%, you can choose to use 40%, you can choose to use 50%. Now, because you want to make a profit, you now add a 30%. At the end, you end up selling your cupcake at the rate of 650 naira. You are making profit because you just went from 500 naira to 650 naira. I hope you are with me. Now, let us look at this sample costing sheet for a naked cake. You have ingredients, you have quantity, you have unit cost, you have total costs. That's for the headings. So for this column, that's the column for the ingredients, I only gave 3 ingredients. Please, in cakes, there are several ingredients used in cake. But because I do not want this particular video to be too lengthy, and then I'm making use of a PowerPoint, you know how it is making use of a PowerPoint. I mean, the tables. So I just picked up just 3 basic ingredients. But please, when you are costing for your ingredients, make sure you write every of your ingredients. For instance, in making a cake, you make use of flour, you make use of sugar, you make use of milk, you make use of margarine, you make use of eggs, you make use of baking powder, you make use of flavors, you make use several others. But I just wrote 3 as the ingredients. Please, it's supposed to be more than that. But the main thing is for me to explain to you how a costing is supposed to be like. So for your first column, I wrote ingredients, flour, sugar, milk. And then the second column, the heading for the second column is quantity. And then the quantity for my flour, I want to bake a cake using a 3 kg flour. So my unit cost, that is cost per kg. How much do you buy your flour per kg? For instance now, per kg in my location, that is per kilogram of flour in my location, is 1,500 naira. Now, I want to make use of 3 kg of flour. So what do? Of course, I have to multiply my 1,500 naira times 3 to give me a total cost of 4,500 naira. I hope you're following me. Okay, let me see if I can make use of a cursor. Okay, so now this here, can you see? Multiply by this, then I have the total cost of 4,500. Do you understand what I'm saying? Now let's look at sugar, for instance. Now you want to, for your 3 kg flour, you want to make use of 2 kg sugar. I'm just using it as an instance. So, whereas the price of sugar per kg is 3,500 naira. That is why I said unit cost. That is how much do you buy per unit. So per kg now is 3,500 naira. However, I'm making use of 2 kg. So mathematics says you have to multiply. That is 3,500 times 2 kg. And then you have 7,500 naira. Then milk. I'm making use of 1 liter of milk. But when I get to the market, they sell per liter at the rate of 4,000 naira. So that is per liter, since I'm still making use of 1 liter, so definitely I'm still going to have a total cost of 4,000 naira. So you do this for all other ingredients. If you're using eggs, you do it for all other ingredients. Now if you're using gram, it's still the same thing. Everything is still the same thing. If you're using, let's say you want to use 500 gram of flour. Now your unit cost, how much do you buy per gram? I'm just using an instance. Then do the mathematics and then you do your total cost. The main aim of this video is to break down this thing to the simplest form so that you can understand. And that was why I just made use of simple terms. So now let's look at the total ingredients now. By the time you add up everything, which is in this is total ingredient. By the time you add up your ingredients, your flour, your sugar, your milk, and all other ingredients that you use in baking your cake, whatever, you will have the total cost of this 15,500 naira. So for this one now, I'm adding 4,500 naira, 7,000 naira, 4,000 naira, and I have 15,500 naira. Now my labor, it's taking me 4 hours to make this cake. Please take note, I'm just making a naked cake. I'm not covering the cake. This costing is just for a naked cake. When I say naked cake, a cake that is without frosting, I am not covering it with icing, sugar, or fondant. I'm just baking it. So it means everything, the time spent in breaking the eggs, in whisking, in being patient till the cake is fully baked in the oven. The time taken in packaging everything is 4 hours. Remember in the formula I said you calculate your total cost per hour. So now per hour I'm calculating for 1,000 naira, right? I'm charging for 1,000 naira per hour. So definitely for 4 hours I'll be having 4,000 naira as my labor cost. Do you get what I'm saying? So let's look at the overheads. The overhead simply means your indirect cost. Remember I told you that another name for indirect cost is your overhead cost or your overheads. And another name for direct cost is what? Your variable cost. So for overheads, that is the indirect cost. Let's say your rent per this cake, your rent, your utilities, your electricity and several others, your delivery, all those kind of things that are not directly involved in the production of that cake, you can now give in your price. So for this one I just used 4,000 naira. Now the total cost means, I told that the formula for a total cost is what? Direct cost plus indirect cost. So for these sample sheets, it means since I'm using an overhead and I'm using total ingredients, it means my total ingredients, my direct cost involve your total ingredients, your labor. So it means what? Total cost equals to direct cost plus indirect cost, which means direct cost plus overheads. So it means that I'm adding up everything from here. My total ingredients falls under my direct cost. My labor falls under my direct cost. My overheads is still my indirect cost. So by the time you sum up everything, you have 23,500 naira. So the yield, let's say at the end, I'm making use of a 7-inch pan, 7-inch cake pan. And at the end, I'm having 10 cakes. So what do I do? So the yield, I just said the yield though, for the unit cost, I had 10 cakes. And each of this cake is 7 inch. Do you get what I'm saying? Now, oh my god. So now for the cost per cake. So by the time we have 23,500, that is, we have gotten a total cost. Then what do? You have to divide it by the number of cakes you got. And the number of cakes I got is just 10. So 23,500 times divided by 10 gives me what? It gives me 2,500. And that is what I have here. 2,350. So sorry about that. 2,350. We are not done with this. Let's move over to the next one. Sorry. It's still a continuation. It's a sample costing sheet continuation because the space was not enough to contain the whole table, so I had to move it to the next slide. So this is profit margin amount, and my unit cost, I'm just making use of a 30% margin. What do? I want to give you some seconds to just think of what you're going to do in this for the profit margin amount. So we have already known our we've known our cost per cake to be 2,350. Now to calculate our profit margin amount, what are you going to do? So it means that you will just multiply 2,350 times 0.3, that is 2,350 times 30 over 100, you get what? 705. That is just for your profit margin amount. Now, how much will now be your selling price? So it means, if you can remember the formula I gave to you, your selling price equals to total cost plus profit margin amount. So our total cost, but for this one, since we already have the cost per cake, so our cost per cake is 2,350. And then we add it to 705, then you have 3055 naira. That is selling price per cake. If you want to have just the selling price for the whole stuff, that is, you want to have the selling price, the total selling price, not per cake or total selling price, it means that instead of using cost per cake, you just make use of total cost to be 23,500, multiply by 0.3, you get your answer. This is what I'm talking about. Coming. This is the total cost. That is if you want to have the selling price for all the cakes, not per cake now. All the cakes. So total cost is what? 23,500. Now multiply by your profit margin amount, which is what? 30%. So what you get your answer, and then you still, to get the selling price, you will now still add it again to 23,500. You get the selling price for the whole 3 kg cake. But because I just want to get the selling price per cake, what I just did is, since I had my total cost, I already had my total cost to be 23,500, I divided it by 10 and I had 2,350. And then to get my profit margin per cake, I just said 2,350 times 0.3. I got this. I got this. I got this. And then to get per cake the selling price, I added 705 plus 2,350, and then I had 3,055 naira. Don't worry, it's very simple. In this video, I think if you are patient with me, I already have I'll be dropping the pricing worksheets in my description box, so you can just feel free to download it. It will help out. Now, if you are here, but then you also want to know how to calculate or do your costing for a cake that is covered with a buttercream or a fondant cake, they are all the same thing. You can still make use. In fact, this is still what you're going to do. The only thing is that your ingredients, you have to. Now, if you are, okay, let's just stop, calm down. Now, if you are here and you are looking forward to, okay, I had to go back to this costing sheets because I know that there are some people that are here that must have been wondering, how then can I calculate for my cake that has been covered with a buttercream or that is covered with a fondant? It's all the same thing. They are all the same thing. What you just have to do is, for your ingredients, you are adding your icing sugar, you are adding your butter, your margarine, everything that you used, all the ingredients you used for the first thing, that is for your covering. If it's your fondant, you have to add your gelatin, you have to add your CMC, you have to add your icing sugar, you have to add everything that was involved in baking the cake, in covering the cake. You add it as your ingredients. You check for the quantity, you check for the unit cost, you check your total cost. And when you are done with everything, you get the total amount of ingredients used. Then for the labor, of course, you don't just labor for baking the cake, you also labor for covering the cake. You know how fondant used to be, the stress involved in fondant. How much are you taking for workmanship for fondant too, for making your fondants? Not just workmanship for baking, you had everything that was involved. You had it into your labor. But what I just did was just for the naked cake, since I am not making a costing for naked cake, and also for a buttercream cake, or a fondant cake. So if you are here and you want to make a costing for them, it's very simple. Just add everything that you used in making the fondant, add everything that you used in making your buttercream, add them to the ingredients used in baking your cake. Everything, add them to your ingredients. Also add to your labor. Of course, it's going to be more than 4,000 naira. So you have to add to your labor. How much will it cost you? How much are you charging to cover that cake? You had that. your overhead, you had that. So it's just the same thing here. Okay. Common mistakes in pricing. Most of us fall short of this. Let's look at them. Number one, not accounting for all costs. Some bakers only calculate ingredient costs, but forget packaging, electricity, rent, gas, and marketing expenses. A solution to this is to always list every cost involved in production, including your indirect costs. Number two mistake we make is undervaluing time and labor. Truth be told, many bakers forget to pay themselves for their work. If you spend 5 hours baking, decorating, and delivery, your time has value. And the solution to this is to add a reasonable labor cost per hour to your pricing. It is very important. Number three mistake, using competitor pricing without proper calculation. Just because another baker sells a cake for 5,000 naira doesn't mean that's the right price for you. They may have lower costs. They may buy their ingredients in bulk or even be running at a loss. See, and the solution to this is to always calculate your own costs and set a price that ensures profits. Number four, offering too many discounts. Giving too many price cuts can eat into your profits. For example, if your profit on a cake is 1,000 naira and you give a 500 naira discount, you know you've lost 50% of your earnings, right? And the solution to this is to offer discounts strategically, such as do bulk orders. Even if you want to give discounts, give it to loyal customers. Or you can do promotions that still allow profits. Number five, not reviewing prices regularly. The cost of ingredients changes frequently. You know, cost of ingredients changes frequently. For example, your flour, your sugar, your eggs, and all others. So if you keep selling at old prices, you may start making a loss. The best thing to do is to always review your prices every few months and adjust if necessary. Okay, so I want to believe that you've learned a lot from this tutorial. But before I take my leave, let us just have a little recap of the key points we have been able to learn so far in this video. Costing basics. Your direct cost, remember I told you direct cost involve your ingredients, your packaging, your labor. Your indirect cost, which involves your rent, your electricity, your equipment, your profit margin. You can make use of any percentage, but I recommend 30% markup for starters. So, number two, you have your cost per item formula, your total costs, which is ingredients plus overheads plus packaging plus labor. You have cost per item, and the formula is total cost divided by yield. You have selling price, which is equal to cost per item plus profit margin, if you are sticking with the first formula I gave to you. Okay, so I am giving you a bonus pricing tip. I hope you put it to mind. It's very, very important, actually. Number one, adjust prices with ingredient cost change. Yes, it is very important that you track your costs. You adjust prices when the cost of your ingredient changes. Number two, buy your products in bulk or at wholesale. Number three, use the retail prices of your products to do your costing. Now, let me explain this. While you are costing, it is very good that you buy at wholesale prices or you buy your products in bulk, such that when you want to cost, you will not make use of that price, your wholesale price, but you will make use of the retail price. For example, now, you bought flour at wholesale price at the rate of 1,000 naira. Now, at retail price, they sell it at the rate of 1,500 naira. When you are costing, you don't use 1,000 naira to cost. You make use of that retail price, 1,500. If you make use of the retail price, that is a gain on your part, because it is you that know that you bought the flour at the rate of 1,000 naira, but your costing, you are adding 1,500 naira. That is a plus for you. You have a gain of 500 naira. So you buy, it is good you buy your products in bulk or at wholesale price, and then you make use of retail prices for your products to do your costing. Another bonus pricing tip I have for you is to offer different sizes for flexibility. Yes, when I talked about different sizes, different portion sizes, when you have different sizes, they will attract more buyers. Okay, so you also have factor in delivery and seasonal pricing. Yes, when you are doing your costing, add your transport cost if needed. It is very, very important. And then focus on quality, not just low prices. Please don't underprice. Build a strong brand. I hope this breakdown helped. Try calculating your prices and drop a comment if you need help. I also have a free pricing worksheet for you. You can check the link in the description. But please don't forget to like and also subscribe. At the same time, please feel free to share with other bakers who need it. Bye.